And good morning, good evening, good afternoon, students and traders all around the world. This is Mike, the FX Boss, broadcasting you live on YouTube and other streaming platforms. Happy Thursday, Wednesday? Happy Thursday. Wow. Everybody, don't forget we have one more week to go and then we go on vacation, alright? We are going to be back in September. And welcome to the Technical Forex and Crypto Trading Course 101. This is for beginner traders. My goal for you is to bring you from zero to a millionaire trader, potentially in 3 years. In an institutional way, you are starting out as a junior analyst, right? You're trying to understand how this market works, and then you are trying to work your way into a trader, but it takes some time, right? And also don't forget, everybody, you are going to graduate from this course when number one, you have your chart set up and ready for trading. Number two, you have a strategy in place. You understand how probabilistic thinking works. And number three, you have a complete understanding on how this market works, so you can analyze the market and make an educated prediction. Please disclaimer, this stream is not trading or investment advice. We are here to learn. Remember, if your way is not working, right? If you're trying for 1 year, 2 years, 3 years, 5 years plus, if your way is not working, why don't you try mine? And for questions and homeworks and the manual, the free manual, send me an email. And today we have how to trade trends inside the market structure. Wow. So it's the new, this is the next level. How to trade trends inside market structure. All right. Whoops, just this one. How to trade trends inside market structure. Well, still valuable information, right? When a pattern is not clear, just simply stay out until the pattern is clear. A consolidation expanding range is like a simple megaphone. It's not a tradable pattern. All right. Hello, Sam. How are you? Okay, everybody. How to trade trends inside the market structure. So you need to chart, right? Okay, everybody. You need to chart and euro dollar. Okay, everybody. So far you should have the Forex pairs or the cryptos that you are, or do you want to trade or whatever. Okay, like this, and you should have the monthly chart, you should have the weekly chart, you should have the daily chart, and then you should have at your disposal whatever you prefer, with the 1 hour chart, 2 hour chart, 4 hour chart. All right, everybody? And I'm even too fast, so and on those charts, everybody, you should have the monthly bands. Exactly, you should have the monthly bands, right? Okay, now I'm going to clone and clone and clone. So your charting software, whatever you're using, or you're using TradingView, or you're using Forex, whatever, okay, you should have the 4 time frames. You should have the monthly, you should have the weekly, you should have the daily, and you should have the 4 hour chart. How do we know when you come back? I'm coming back. Give me a second. September the 2nd. September the 2nd, all right? All right, Sam, September the 2nd, I'm coming back. Anyway, you're going to have everybody notification from, if you subscribe to the channel, everybody, if you subscribe to the channel, right? If you go to Dukascopy Academy on YouTube and you subscribe to the channel, they're going to tell you, right? Okay. Okay, everybody, so this is so far, then we've learned so far what you should have on your chart. You should have the market wave, the market structure, or the market wave trends, right? And on the monthly, we said on the monthly, you are not going to see trends, so you need to chart extension, retracement, extension, retracement, extension. Give me a second, everybody. Retracement, extension, this is on the monthly chart. And then we've learned trend lines, right? So far you can make it also transparent to have a better visual. And then we've learned trend lines. So from the monthly chart, you know, this is the trend line, right? Just an example. And I'm sorry, Forex doesn't have the feature that you can, you know, that you can do this on all the charts. So we need to do it manually if we're on Forex. Alright? On TradingView, you can just open the chart and... So if this is the weekly chart now, here you have, it's going to be similar, but you can see the change in the shortened trend. So extension, retracement, extension, retracement, right? Lower low, extension, retracement, extension, retracement, extension is going to be similar. So extension, retracement, and extension and retracement. From the weekly, and also from the weekly we have the downtrend line. Everybody, are you building your charts? Are you doing number one, everybody? Are you building your charts? At the end of the course, your chart should look like... Alright, this is Forex 3, don't worry, everybody. Maybe it's not to the date. Give me a second. And Fibonacci are barking, so give it a second, everybody. So at the end of the course, your chart should look like this. Make sense, everybody? And this is Euro-Dollar monthly chart. Alright? This is a completely built chart from the Forex course 101. Alright, so you have the market wave, you have support, resistance. So number one, you have the market wave. And give me a second. So this is yellow. Yeah, we're going to check Bitcoin too. Okay, everybody? You have the market wave. You have the Fibonacci's that you're going to learn. You have the downtrend line. Alright, just an example. You have a downtrend line. And you have support, resistance, pivot points. And then you have an indicator. Just an example. Okay, and you have this on the monthly and the weekly. and the weekly with the Fibonacci's and everything, and the daily and the 4-hour chart. Are you building your charts, everybody? That's the question. And where are we? I need to find classes. Classes, basket 1, 0, JFX, basket. Give me a second, everybody. Classes, there you go, classes. Can you please show us how to Sure, let me open, but you're on JForex 4, right? So I need to open JForex 4. Everybody, if JForex is too complicated, you can go to trading view, makes sense? Go to here and let me see if it's going to open the charts. I cannot open, I have another PC, but anyway, you know, it's JForex 4, alright, give me a second, everybody. I need to put the new data in. Alright, seems I have a problem. So can you please show us how to maximize? It's right click and it's full screen. Can you see the last one here, Sam? Full screen tabbed panel, full screen tabbed panel, and you left click. But on JForex then you need to press F11. On JForex 3 it's right click and exit full screen. So it's right click, everybody, full screen tabbed panel, and it's right click, exit full screen. On JForex you need to press F11 to come back. Alright? And to have the full functionality, everybody, I believe if you go JForex 4 manual, I believe you have the JForex 4 manual, desktop JForex, this, oh, they're manual. Alright, everybody, you have everything, add indicators. I'm not sure if what, JForex 4? How to install, start, oh, this is JForex 3, okay. JForex manual, JForex 4, JForex 4, desktop JForex 4, installation, versioning, several folders, migration, new orders. Oh, you have here preferences, strategy, orders, positions, alerts, economic, what's new. White Rabbit, how to know whether our market wave lines are correct or not? Great question. Okay, everybody, so back to class, right? How to trade trends inside the market wave. How to trade trends inside market structure trends. Alright, everybody? So, in a down market wave, in a down market structure, you are going to see a downtrend first. So it's going to make lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Then it's going to stop making lower lows, lower highs. It's going to make higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. This is the retracement, and then it's going to start to make lower lows, lower lows, lower highs, lower lows, lower highs. So it's going to push down in a downtrend. All right, everybody? Okay. Transparency, all right, and this one is going to be, there you go. So how to know if our market wave is correct? If you can find the change in the short-term trend, then this market wave is correct. This is the answer. All right, White Rabbit? If you can find the change in the short-term trend, then your market wave is correct. Make sense? Sometimes it gets confusing because I need to understand that if this is the downtrend, and if this is the uptrend, and if this is the downtrend, give me a second. And if this is the uptrend, and if this is the downtrend, you know, sometimes it gets confusing because I must understand that a trend and a market wave, it's a sequence of highs and lows. So I must learn what are the relevant highs and lows. White Rabbit, which one is relevant low? The first circle or the second circle is the relevant low? So this is theory, right? The market wave, it's composed with downtrend. In a down market wave, is going to be a downtrend extension. Uptrend is going to be the retracement. And another downtrend is going to be the new extension. But there are another concepts that we learned, that a trend is a sequence of highs and lows. Therefore, not every high and low is relevant. So if you see something like this, everybody, I'm asking White Rabbit, is the first circle the relevant circle or is the second circle the relevant circle? Sam is saying that I'm using the pivot point indicator. Let me see if this is the one, pivot. I cannot find it, which one is the correct one. Not both? No. You need to translate this to this. So White Rabbit is the first circle, the relevant low so far, or is the second circle the relevant low so far? In the meantime, everybody, how to trade trends? Let's write down. Trading concept, the best entry is the end of retracement entry on the market wave. The second circle, correct. Why is that? Why the second circle? You are correct, but why the second circle? In the meantime, everybody, trading concept, the best entry, talking about how to trade trends inside the market structure. The best entry, it's end of the retracement. Okay, everybody? In this example, the end of the retracement is the circle in here. Because it's lowest. Very good. So you got this right. Okay, we're going to put a rectangle. Now, which one is the relevant high? Is the first circle the relevant high? Or is the second circle the relevant high? Question for White Rabbit. You got correct, so this is the so far, right? What about the high? So it's high, low, we need to find another high. Between those two, which one is the relevant high? In the meantime, for the others, everybody, trading concept, the best entry, it's the end of retracement. How do you know? You are going to see the change in the short-term trend. First circle, you're correct. Why is that? You're correct. First circle. Why? Why the first circle? Now we have a difficult question. Well, this was easy, right? This was easy because this is a lower low. Now, why is this one? Is the higher than the second? But aren't we looking for lower lows, lower highs, teacher? Aren't we looking for lower lows, lower highs? So no, it's not because the reason it's not because it's higher, because we are looking at lower lows, lower highs. I'm going to help you out because it's the first one. When you chart, you go high to low, and it's a sequence. It's low to high. It's the first one. Okay, this is the reason, because it's the first one. So if this is the chart and I'm monitoring the chart, you know, I have a lower high, all right, but then I don't have a lower low, agreed? And I'm monitoring the market and I still have a lower high, but I have already, so after the lower high I need a lower low. So only and only when the market makes a new low compared to this low, this low becomes relevant. Okay? And you go high to low, low to high, high to low. Alright, everybody? This is why sometimes it's confusing when you see the weekly chart right? You see the weekly chart and you see the market wave like this, and you're wondering, well, you know, why did he let all of these highs and lows out? Or why didn't he, talking about myself, why didn't he bother about this stuff? Because all of those are not relevant. This low, it's not relevant. Why not? Because this low, it's not lower than this low. Make sense, everybody? This is the relevant low. Same logic. Why? Because it's lower compared to the previous low. All right? That's the logic. And it's a sequence. You're welcome. Okay, everybody, talking about trading, the best entry is the end of the retracement. Okay, now $1 million question for the beginner trader, which is not a trader, you are an analyst. Everybody, there is no right or wrong, okay? But if you enter shorting the market here and you don't see the future, all right, between the red market wave and between the short-term blue short-term trend, which one is the driving force? Is the market wave driving the trend down, or is the blue downtrend driving the red market wave down? What is the driving force? Who is stronger? Come on, there is no right or wrong, don't be shy. Who is stronger? The red one, very good. So if you short the market in here, the market made a lower low, right? You short the market in here, green, and like this. You short the market in here. Should your stop loss go on the stop loss number 1, or should your stop loss go on the stop loss number 2? And I'm going to tell you, it's a tricky question. Stop loss number 1. Should the stop loss go on the stop loss number 1, or should the stop loss go on the stop loss number 2? Boss, can you repeat please? Yes, sir. So we are learning how to trade trends inside the market structure. We are learning how to trade the blue. And the trading concept is saying the best entry is the end of the retracement on the market wave. This makes sense, right? This should be a no-brainer on the logic, on the why. So if we understand this and we are entering here, you know, end of the retracement, the market is changing the short-term trend. The next question is, which stop loss is the correct stop loss? Should be the stop loss number 1 the correct stop loss, or is the stop loss number 2 the correct stop loss? And then we have a question, what is driving what? Is the red market wave driving the short-term trend? Is the red driving the blue, or is the blue driving the red? Hedge fund trader Sam, you are quiet, come on. White Rabbit says stop loss number 2. Anybody else? The best entry is the end of retracement. Sam, stop loss number 1 or stop loss number 2? Remember, it's a tricky question because we have another trading concept. It's really a trading rule. The stop loss goes on the pattern traded. Stop loss number 2. And the correct answer is, everybody, it depends. It depends. Alright? Okay, everybody? Now, let's go step by step. If you are here and you are short in the market, at the green, everybody, alright? So okay, let's make it simple. Oh, no, it's alright. So this is the lower low, right? In here. You shorted the market in here. Sell / short. Okay? Now, pen and paper. Okay, everybody? Now, trading rule, the stop loss goes on the pattern traded. If you are going to enter the market, everybody, if you are going to short the market in here, just an example, with this counter trend line break, which we didn't learn yet, and you are trading the blue, is just an example. If you choose to trade the blue, the stop loss goes on the most recent high on the blue. But if you are going to say, no, I'm not trading the blue, I'm trading the red, then yes, the stop loss goes on the stop loss number 2. Boss, can you repeat, please? Yes, sir. If you are trading the blue, which is a downtrend, okay, and you are going to enter here, shorting the market, then the correct stop loss is on the most recent previous high. Why is that? Because if the market goes against you at this level, is going to break the pattern. Do we agree on that? If the market stops you out on the stop loss on the blue, is going to break the downtrend. You are not in a downtrend anymore. Relevant high on the downtrend, relevant low on the downtrend, relevant high on the downtrend, relevant low on the downtrend. So you've entered here, the market reversed and stopped you out at the red. The market made the first higher high and we don't have a downtrend anymore. Do we agree on that? What time frame is the best to draw the market wave? White Rabbit, you should have the market wave on all time frames. Everybody, you should have the market wave on all time frames. If you want to make money, you should have the market wave on all time frames. Back to class. Do we agree, everybody? Is this logical? Is this common sense? Type in the chat, yes, I agree, or type in the chat, I don't agree, or type in the chat, yes, this is logical, this is pure logic, or type in the chat, no, this is not pure logic. All right, very good. But if I choose that I'm going to short the market, sell, and I'm going to... So the stop loss on the picture, right, should be... Oh, it's already here. This is the stop loss number 1. So this is the relevant, right, on the downtrend, relevant high. Okay? But if I choose to trade, to short the market structure, also called the market wave, then the correct stop loss is the stop loss number 2. And yes, we've learned that the safest stop loss, talking about in the terms of safety, stop loss number 2 is safer. Right? Because the blue many times can do like this and can go into a deeper retracement. Okay, everybody? And remember, we are working on number 2. You have your strategy in place. Now you are deciding, you know, or homework until tomorrow. Decide if you are going to trade the market wave or decide if you are going to trade the short-term trends. Boss, can I trade both? Yes, you can. You can trade and the short-term trend and the market wave on the same chart. Yes, you can. Okay, everybody? Now, what's the difference? The difference is where you are going to put the stop loss, and also the difference is if we are going to trade risk-reward ratio 1/2, and if this is the trade on the blue on the short-term trend, I'm going to profit take down in here. If I'm choosing to trade the market wave, this is the level of my stop loss, so I'm going to profit take. It's going to take a little bit more time. I'm going to profit take down in here. Does this make sense? Boss, can you go 1 per 1.5? Well, I would not advise you to, but it's your business. To the beginner analyst, I would say no. Go for 1/2. Build the skill. Build the emotional skill of being resilient. All right, everybody? So the stop loss is going to affect the take profit too. And we are here on euro dollar, right? Euro dollar. And we have on the daily chart, we have the first market wave. So some of you are late to the party anyway. It's going to be extension, retracement, extension, retracement, extension. But then the market broke the relevant low. So we have the first down extension leg, and then we have the retracement leg, and this is so far the market wave on euro-dollar daily chart. And inside this market wave on euro-dollar daily chart, everybody, as you can see, you have short-term trends, right? Market making lower lows, lower highs. And also, as you can see, everybody, if you would enter here, you would make some money, some pips. If you would enter here, counter trend line break, you would make some pips. But if you would enter on the third one, just an example, the market would stop you out. See in here? Give me a second. This is not the correct answer. We said most recent high, so up in here. Okay, everybody? So the market is playing around, and it's making uptrend, and then it's making downtrend, you know, and it's making uptrend right here, kind of lows and highs, and now it made low to high to low. Okay, everybody? Yes, crowns, we're going to learn in the future. Okay, so in conclusion for today, if you are shorting euro dollar, this is no trading or investment advice. The safest place, it's up in here. Okay, otherwise it's up to you. You need to find a pattern that you are trading. Okay, and if you are trading the short-term trend with the counter trend line break, maybe, just maybe, you know, it's an example, you know, you can put the stop loss above the most recent high, which is up in here. Okay, everybody, just an example. So you have low to high to low to high, and if you connect, and this is the blue one, all right, if the market goes up and breaks the blue, then you have no downtrend anymore. All right, just an example. Exactly, this is the same that we were talking. Can you see, everybody? If I delete this one, and delete this one, and delete this one, and delete this one, this is exactly what we were talking about. All right, this logic in here is this logic in here. All right. Okay, everybody, our time is up. See you back tomorrow. Until tomorrow, stay strong and chart. Build your charts like a boss. Never forget, you're the boss of your own